Hi, this is Spencer, founder of Synapse Trading, and today I'm going to share with you an interesting topic, which is how do you pick the bottom in the stock market, right? And today I'll be sharing with you two very simple and idiot-proof techniques that you can use to time the bottom of the stock market. Now, a lot of you might have heard, the saying that, oh, it's not possible to time the market. You shouldn't waste your time doing it because, no one can pick the exact high and low of the stock market or any market, right? And in a sense, that is true, right? It is not possible to pick the exact top and bottom. But however, it is definitely possible to time the market, right? To pick a better entry, right? So that you reduce your risk and increase your upside in the market. Now, one of the simple principles that you can rely on is that whenever you are trying to time the market, you cannot catch the last 1/8 and the first 1/8 of any trend or any move, right? So I've done a simple illustration here, right, which you can see. Right. So for example, right, this is the top of the market over here, right? And you are trying to short the market, right? You won't be able to short at the exact high, right? You have to give up this top 1/8, right? And if you are trying to catch, right, the bottom of the market, right? You want to buy near the bottom, right? You have to give up the bottom 1/8, right? You wouldn't be able to catch or buy in at the exact 1/8. Right, because you won't be able to time it so exactly, so you only will sort of know that the market has changed the trend, right, when it's gone past the 1/8 mark, right? So that's why there's a saying that you have to give up the top 1/8 and the bottom 1/8, right? So this top 1/8 and bottom 1/8, if you add them together, it's 25%, right? Which means that you have to give up 25% of every move. However, you'll still be able to catch, right, the bulk of the move, right, which is the remaining 75% of any move, right? So as a trader, your goal should be trying to catch, right, that 75% of the move instead of trying to time the exact top and bottom to capture the extra 25%, right? Because that 25% is the hardest, right? And your chances are, if you try to do that, you will end up wrong most of the time, right? So why do it the hard way when you can focus on taking the easy trades and catching, right, the remaining 25%? Okay, so what are the two methods that you can use to pick a bottom in the stock market, right? And this method actually also works when you're trying to time the top of the market, or you're trying to short the market, right? Or you want to close your long positions if you feel that the market is getting too high, right? So in a sense, it allows you to time both the market tops as well as the market bottoms. Okay, so the first simple method, right, that you can use, right, is called the scaling in method, right? So this method is actually very simple, similar to like dollar cost averaging, right? Because in a sense, it doesn't require much skill to time the market or read the market, right? Because you are kind of just buying in at certain levels which you have already planned to do so, right? So for example, right, as the market declines over here, right, as the market declines, right, you know that most markets, when the markets decline, they usually drop about between 30 to 60%, right? That is the usual correction for a bear market, right? So for example, if the market has already dropped 30%, right, and you feel that that might be near the bottom, or actually you don't need to know that it's near the bottom, right? When it has dropped 30%, you might decide to say, okay, I'm going to buy in maybe with 20% of my capital, right? So you're also splitting up your capital, right? So when it has declined 30%, you go in with 20% of your capital, right? I'm just giving an example, right? And if it drops, continues to drop to say 40%, right? Then now, you go in with maybe another 20% or 30%, right, of your capital, right? And if it drops, to say the 50% mark, right? Then maybe you deploy, another 20% of your capital, right? And if it continues to drop, all the way to say the bottom, right? Or it drops to maybe a 60% mark, right? Which is usually going to be quite near the bottom, right? Then you go in with all the remaining of your capital, right? So using this method, you will have been able, you wouldn't have captured the exact bottom, right? But you would have been able to deploy most of your capital, buying somewhere near the market bottom, right? In a sense, because this doesn't require much skill and timing, right? All you need to do is to decide, which are the levels which you are going to deploy your capital, right? So in a sense, it's quite a stress-free method, right? Because you do not need to be worrying or looking at the chart all the time, right? Once you have decided on levels, every day you just need to see, okay, has it hit my level, right? If it has, you buy. If it doesn't, then you just don't do anything, right? So that is a simple way, if you don't really have any market knowledge or you don't know how to read charts, right? That is a simple way for you to pick the bottom of the market, right? So that's why it's one of the idiot-proof ways. Okay, the second method, right, requires a bit more skill, right, in the sense that you need to know a bit of technical analysis, right? You need to know what are like reversal patterns, how bullish reversal patterns, bearish reversal patterns, so that you can look for them on the chart, right? So usually reversal patterns happen in the top 1/8, right, as well as the bottom 1/8, right, of the chart, right? These are usually where the major reversal patterns occur. And if you are able to identify the patterns, that basically tells you that the market is either going to top, right, or going to bottom, right? So you can choose not to deploy your capital until you see one of these reversal patterns, right? So if you're trying to pick the market bottom, right, you'll be looking for, say, a bullish reversal pattern, right? So you don't use your capital until you see that bullish pattern, and then you start deploying your capital into the market, right? So in a sense, it gives you a bit more precision, in timing the market, right? But you will still not be able to capture that remaining, that final 1/8, right? Because that 1/8 is the time at which the bullish reversal pattern is forming, right? So you need to wait for the pattern to finish forming before you know that the market has reversed and it has changed direction, right? So just to give you an example, right, in 2008, right, if you remember the market crash in 2008, it was the pattern at the top, right, was actually a double top reversal pattern, right? And in 2009, when the market recovered, right, the reversal pattern was actually a bullish inverse head and shoulders pattern, right? So these are just some of the really common reversal patterns that you find in the market, and although it's very basic, right, it actually works pretty well, right, if you have the patience to study the chart. Okay, so these two methods, right, they as I mentioned, they work well both for trying to pick the market bottom as well as trying to pick the top in the market. Okay, and not just the stock market, right, but it works well for different markets as well. Like if you're trading forex, trading commodities, right, and it's not just the long-term charts, right. It also works on, say, the swing trading, the intraday charts, right. So this is I would say a very practical and universal principle, right, which is to catch the mid, right, of the trend, the mid of the move, right. We should always aim to catch the easy 75% of every trade, right, and try to avoid timing catching that top 1/8 or the bottom 1/8 of the trend, right. So I hope this video has given you some insights as to how you can more effectively time the market, right, whether for your trading or for your investments. Okay, so remember the two main techniques, right? The first is the scaling in method, where you decide on which are the levels which you are going to buy in, right, and then you just execute it, right? And the second method, which uses a bit of technical analysis, right, identify the major reversal chart patterns. Of course, you can combine it with other techniques and setups, right, to further increase your hit rate. Okay, so that's all I have for this video, right? If you enjoyed this video, do remember to subscribe for our YouTube channel. And if you want to learn how to trade, right, there are a lot of useful trading guides on our website where we cover a wide range of topics. And lastly, if you are interested in daily market analysis and trends and major news, right, do join our Telegram channel as well, right, which you can find in the comments below. So that's all I have for this video, and I'll see you in the next video.